In this video, we're going to be going through 3 potential investment opportunities that I'm personally looking at going into, well, kind of the previous week and coming into the next week. So to get straight into it, we're going to start off with probably my favorite of the 3. And this is going to be Tmobile, ticker TMUS. We can see on the Friday, we did close down 5.5%. We did start to bounce at these lows. Now, why am I looking at this from an investment standpoint? So firstly, one of the key catalyst was to do with Amazon potentially offering wireless plans. They said now it wasn't going to be included in Prime. So again, not going to, I don't think, have a massive effect on the long-term effect basically on Tmobile. And again, I think it was more of a short-term overreaction. So if I'm looking at the investment account, this is definitely an opportunity. And now what you can see as well, what is key, is where did we break down to? Where are we currently sitting? So to quickly cover this, because these are going to be 3 key for the 3 stocks that we're going to be talking about today. We have these lines here. If you've never seen this channel before, what these are standard deviation channels. So this is the third, the green's the third, the blue's the second, and the golden yellowy one is the first. Now again, this is like normal standard deviations. 68% of the data should trade within the golden deviations, and 95% of the data should trade within the blue deviations, so the second deviations, and 99.7% of the data should trade within the green deviations, which is the third deviations. So that's a quick breakdown on what we use to find our levels and whether the stocks are overbought or oversold. And again, if we're looking at it from an investment standpoint, we're looking at stocks which are oversold. And that's exactly what's happened at Tmobile. It came down to its third deviation. Whenever we see this, again, this chart's a 6-month, on the right we have a 1 year. If we can see a stock at or below its third deviation on the 6-month or the 1 year, but especially if it's on both, that's a really good high probability that firstly on the year and the 6-month, it is really oversold. So if you believe in the company long term, you're probably going to be catching it near those 52-week lows, but overall it's going to be a good discount compared to 6 months and a year. So again, if you're looking at investing in a company, these are usually the times to be doing it. So we can see, where did we start to bounce? We came down to its 4th deviations around 124 is where we started to bounce our 4th deviations. And again, you can see, where did we close on that day? It really tried to close back above its 3rd deviation on both the 6-month and the 1 year. Again, showing that their strength, showing that buys are really in the control. And again, really that it can potentially be a really good investment opportunity. So if you're looking at the telecoms, T-Mobile could be a choice. It's extremely oversold. Potential for, a good increase from where we currently are, around that 130 back to fair value. We're still looking at about a 12% upside. And what is fair value? That is just statistical mean. And again, if you're looking at mean reversion, again, that is obviously its mean. So that's where we would expect it to go to. But again, if you're holding it as an investment, that's sometimes a trading opportunity. If you're holding it as an investment, you potentially looking to buy at these oversold areas and start to sell at these overbought areas. So again, if we're looking at overbought areas, current potential could be, if you're looking at that first deviation, around 15%, and if you're going to extremely overbought, 23%. Again, we don't tend to really lock in profits that far out. We tend to look at the second, usually at the furthest, which in this case is going to be around 19% if we look at the 6-month, or around 21% if we're looking at the 1 year. So T-Mobile definitely has some upside opportunity. Again, doesn't mean there's no risk on it, but it is definitely got some good upside risk now, or upside potential, sorry. Now, on to the second one, we're going to be looking at Target. Now, the stock has been getting battered lately. Again, some of this was off at earnings. And again, it's just getting quite a lot of bad press at the moment. So, don't really want to go into political views, because obviously this is a trading channel. We're not political. But a lot of the backlash they're kind of getting, or boycotting they're getting, is on the phrase, go woke, go broke. And that's exactly what you're seeing on Target. Could be part of the reason it's getting sold off on. Or again, it could be completely down to their earnings. One of those things is you probably just want to put into account, maybe do your own research in whether that's something you want to take the risk on. If you think it is a risk, you might just think that's just a short phrase, and if so, we're fine. But again, just wanted to point that out there so you could do your own due diligence if you want to. Now, again, we're going to be looking at the exact same thing. Where is Target on this 6-month and the 1 year chart? And we can see It's down at its third deviations on both the 6 month and the 1 year. So again, extremely oversold on the year and the 6 month. So again, if I'm looking at a stock long, this is one that I would be liking to buy. Again, kind of came down to its lows, tried to push down to its fourth deviations, couldn't quite get there, and we started to get that bounce. And again, with all these stocks that you're seeing, you need to kind of take into that account is why are they bouncing as well? Do you think that people are finally really realizing it's oversold and are starting to buy it because of that? Or is it just bouncing because the overall market is? Again, on something like Target, yes, the overall market was green on the Friday. So again, it could make sense why we started to bounce. But again, overall, strong downtrend while the market has been relatively strong, or at least flat. So again, take that into your own, again, due diligence. But from a standard deviation standpoint, we are oversold. So again, if we're looking at this stock, or if this was a stock you were potentially looking to buy in the investment portfolio, what better time really than when it's at a 52-week low and extremely oversold on both the 6 month and the 1 year. So again, Target, a second one that I'm really looking at this week. Now on to the final name. We're going to be looking at Moderna, ticker mRNA. Again, especially kind of on the Friday was definitely quite strong. Didn't even come back to test its 2-day anchored VWAP, but straight into kind of the key levels, the standard deviation channels. Now, this one you are going to be taking on more risk than the Target and the Tmobile plays, and the reason for that is again we can quickly see where we're sitting at on both a 6 month and a 1 year time frame. And that's at our first deviations. Again, what did we say that happened at the first deviation, or what percentage of data should trade within it? 68%. So again, that isn't, quite a big difference compared to the 95% that we're looking at the second, or the 99.7% that we're looking at the third. But it's not to say there isn't upside opportunity. And the reason I'm picking this one as the third is, again, I don't want to go for always extremely oversold stocks, because I know some people don't want to be trying to catch that potentially falling knife. So on a stock like this, has been a bit more range bound, especially on the 1 year. You can see these deviations are essentially flat, kind of shows you that it's range bound on the year. And on the 6 month, potentially a bit more of a downtrend, but overall still quite a range bound stock. When it's staying at these lows, it's pretty flat, but if there's a move to the upside, you can see that's where it has potential for those strong moves. So Moderna, again, going to be a bit more of one of those more controversial stocks, because you are taking on more risk, because it's to do with what kind of vaccines, what kind of medicines are they doing that's making money. There could be a lack of FDA approvals, and if so, then you may see this stock get hit hard. And again, on the other hand, if they start to get the approvals, you might see this stock skyrocket. So again, take that into account when you're looking at a stock like this. There is extra risk that you cannot always foresee. So it's one of those things, if you are looking at this, again, take into account that risk. But why do I like this level? Again, because we are still relatively near those 6 month and 1 year lows. You can see that we're looking, around that 115 to 130 is kind of that range I like. If we're buying at these lows, we're still buying relatively cheap on a 6 month and 1 year time frame. We are buying at or kind of below our third deviations. Our first deviations. So again, if we're looking at stocks investment as an investment side, I will never buy them really above this statistical mean, but very rarely do I even buy them at. I like to buy them any value below, and we can see obviously that fits the criteria on Moderna that we are below. So it's one of those stocks where if you don't want to potentially catch that falling knife, because in this case we're not selling off anywhere near as hard as the Tmobile and the Target, but you are still looking at a relatively discounted stock on a 6 month and 1 year outlook, then this stock on Moderna is potentially one to be paying attention to. Now, I hope you enjoyed this new series that we're doing. If you did, why not drop a like and subscribe? Let me know if there's any other stocks you're watching coming into the next week. And if you enjoyed the video, you will probably enjoy this one too.